Hello, we are Abysmal, the footwear industry champions of 2022. I'd like to introduce you to our executive team. Riley Chado is our Chief Financial Officer. Christopher Kutsin is our Chief Operations Officer. John Lee is our Chief Marketing Officer. Merez Perez is our Chief Product Officer. And I am Jessica Jones, the CEO. When our executive team first took control of Abysmal in year 11, we extensively discussed and tested a variety of strategies to see which one would yield the highest results. We determined that differentiation in the market through high number of models, high price, and high quality would yield the most profit, and thus our strategy was formed. We focused on producing the highest quality footwear possible and building our brand so that Abysmal footwear would be known around the globe. Abysmal's goal was to create an expansive shoe line for men, women, and children so that our customers could find the perfect shoe that was right for them. We knew that we wanted to aggressively increase the number of models in our line, and by year 14, we had 500 models available in each region. One of our strategies was to prioritize the various markets so that we could focus our attention and funding on the area that would be the most profitable overall. We decided that the wholesale segment was our main target, so we made wholesale sales our top priority. When it comes to the success of Abysmal in the wholesale market, we determined that money spent on retailer support was a key factor. Throughout the past 10 production years, the amount of money that Abysmal spent on retailer support was 33 to 73% higher than the industry average, and this is why so many retailers wanted to carry our shoes. Another key component to Abysmal's success was our brand advertising. On average, Abysmal spent 36% more on brand advertising than the industry average, and Abysmal is now a household name known around the world. Our profit margins in the wholesale segment were certainly impressive. In 10 years, we generated $56 billion in profit in North America, $50 billion in profit in Europe, Africa, $60 billion in profit in Asia Pacific, and $55 billion profit in Latin America, for a grand total of $222 billion of profit in the wholesale segment. On this chart, Abysmal's market share is represented by the blue circle. With this visual, you can see how Abysmal's market share in North America has shifted in the 10 years since we took over control of the company. Our strategy from the beginning was to get ourselves positioned in the top right corner of the graph as we achieved our goal of high models, high quality, and high price. In year 11, our placement was almost in the very middle of the graph, and as each year goes by, you can see our big blue circle moving further to the right and further up as we set to differentiate ourselves from the competition. From year 14 through 20, Abysmal dominated the high-end, high models market, and we are proud that our strategy worked. In Europe, Africa, our ascent to the top is similar, and by year 14, we established ourselves as the top high-end, high-model shoe company positioned in the top right corner of the graph. Also, in year 14, our market share in the wholesale segment dropped dramatically, but we didn't give up our hope of having a healthy portion of the Europe-Africa market. By year 17, we reestablished a respectable amount of market share in Europe-Africa, and we have been able to maintain that market share ever since. The Asia-Pacific wholesale market was our strongest and most consistent region overall. It is safe to say that we maintained a nice-sized portion of the Asia-Pacific market throughout our 10 years with Abysmal. As with the other regions, year 14 marked the time when we outmaneuvered the competition and became the regional leader in high-end, high-model footwear. In the later years, you can see that a couple of companies succeeded in reaching our area on the graph. However, it is worth noting that none of them compared to the same volume of wholesale market share that we had. In Latin America, we reached our target location in the top right corner of the graph in year 15, which is 1 year later than the other 3 regions. Abysmal was very well received in Latin America, and we captured a large chunk of their market and held on to it for the entire 10 years. As a company, we are very proud of what we have achieved in Latin America. Our second priority in our business strategy was internet sales. In year 11, we decreased shipping from 3 weeks to 2 weeks because we wanted our customers to receive their new shoes faster. Our company has never offered free shipping to our customers because free shipping greatly reduces earnings per share and profit margins, and we found that our customers were willing to buy our shoes even though they had to pay shipping charges. In many of the years, we found that paying a lot of money for search engine advertising did not prove to be profitable or increase customer orders, so we kept our search engine advertising amount relatively low. At one point, our search engine advertising was 42% below industry average, and at its highest point, our search engine advertising was only 19% above industry average. Despite our low amount of search engine advertising, our internet segment was certainly profitable for us. In 10 years, we profited $28 billion in North America, $22 billion in Europe, Africa, $25 billion in Asia Pacific, and $27 billion in Latin America. In total, we made $104 billion in profit from our internet segment. It is worth mentioning that some years we were making as high as $50.43 profit per pair of shoes sold online. Our profit margins are insane. Private label was our third priority, but this doesn't mean that we felt it was unimportant. We still sought to produce and get offers accepted on our private label shoes. Every year, we attempted to produce enough private label to meet the 16.6% market demand. We always tried to ensure that our private label shoes were priced on the low end of the cost spectrum so that our bids would be accepted. Our strategy with celebrity endorsements was that we didn't prioritize getting endorsements in the early years because we didn't want to spend a lot of money. In the later years, we decided to increase the amount we were willing to spend on celebrity endorsements so that we could increase our demand and market share in each region, and also to prevent our competitors from getting the endorsements. Our strategy when bidding on celebrities was to increase the amount of their prior contract and to bid a number with a random ending in order to increase the possibility that our bid would be accepted over our competitors. For example, we would bid $15,324 instead of $15,000 even. We also determined which celebrities had the most appeal in each market, and we bid on celebrities that would help us in our target market. And in year 20, we made our offers as soon as the new year started at 12:10 a.m. on Sunday to try to increase our odds of getting celebrity endorsements, since we knew that every company would be placing an offer for the max amount that year. This strategy proved successful, and we got the 3 celebrity endorsements that we wanted. In the early years, we knew we wanted to expand early and often in Asia Pacific and Latin America. This was an important factor to our success because we were prepared to meet the high demand in the later years. We expanded briefly in North America and then sold our facility and remaining equipment when the majority of our equipment depreciated and we never produced in North America again. We decided to produce only in Asia Pacific and Latin America because labor costs were lower in these regions and this would increase our profit margin. We implemented option B in year 11, which reduced the cost of production by 50%. This helped our profit margin tremendously for 10 whole years. In year 16, we implemented option C, which added a star to our SQ rating. This was a costly option, but it was very beneficial because it increased our demand through the slower growth years, and it also helped reduce our material costs because we could spend less on superior materials and still produce our top quality shoes. Our main competitor was Company F. They were ranked as the second best company overall. They also seemed to have a similar strategy of high price, high model, and high quality, and wherever we were on the graph, F was always right below us. In year 16 specifically, for the first time ever, they surpassed us in earnings per share, return on equity, and on stock price. We took a big hit in year 16 because we did not win any celebrity endorsements in year 15. Having no celebrity endorsements in year 16 made our customers lose interest in our company. The chart on the right shows the projected year 16 consumer appeal, and you can see that Abysmal, also known as A Company, had 0 consumer appeal across the board. As a result, our earnings per share, stock price, and sales volume dropped. To rectify this, we knew that we needed to boost brand awareness for year 17, and the way to do that was to secure celebrities again. We were aggressive with our bids, and we bid over $20,000 for the 5 celebrities who had high appeal in the regions that we wanted to target. We set a maximum cap that would allow us to get 3 celebrities. We won the 3 bids, and as a result, our earnings per share shot back up to $16.80 in year 17, and Abysmal regained our spot as the top company in the industry. The first of our finance strategies was to always take out a loan to meet our needs. Our total bank loans over 10 years was in excess of $1.7 billion. We used our loans to fund stock repurchases, production facilities and equipment, as well as warehouse expansions. Loans allowed us to expand at a fast rate, and every week we prioritized repurchasing stock, which increased our earnings per share and return on equity. When it comes to the exchange rate, we looked at where shipping shoes to and from would bring in the most money. This is why we specifically ship shoes from Asia Pacific to Europe, Africa. When we did this, we found a positive 2.72% on revenue impact, and in Latin America to North America, we found a positive 18.4% revenue impact. This helped us to be cost effective and increase our profit margins. You should choose to invest in Abysmal because Abysmal is the top global footwear company in earnings per share. We went from $5.13 in year 11 and grew that to $22.52 in year 20. Abysmal is also the top company for return on equity, and we went from 39.6% return on equity in year 11 to 47.6% return on equity in year 20. Abysmal is the leader in stock price, and we went from $140.04 a share in year 1 to an outstanding $530.17 stock price in year 20. We are proud to have won the Industry Champion Award in 2022. You should invest with us because Abysmal is ran by a group of knowledgeable and passionate people who have a wealth of experience in the footwear industry. So make the smart decision and invest in a winner. Invest in Abysmal. Thank you for your time.